We're looking at using extra money with our money management system. And if you've watched other videos, you see some familiar signs here. We are borrowing $22,000 from the insurance company, depositing it to our money manager's account, depositing it to our personal account, going out buying $22,000 of goods and services. We have income coming in. We're making $1,100 monthly loan repayments to the money manager account. Now, up in the right-hand corner, you'll see that we have a travel trailer. We had a travel trailer that slept 8 people. We made lots of great memories in that travel trailer. We had a 9th person join our family, and we still squeezed into the trailer. When we had a 10th member of our family join us and all those other bodies had been growing, we decided it was time to sell the trailer. So we're going to have $15,000 come in from the sale of that trailer. We want to be responsible with our money management system. So we're going to look at 3 options of what we can do with that $15,000. Could $15,000 purchase a new policy? Well, yes, it certainly could. But I'll tell you what, we don't want to do a policy with a premium of $15,000, because what are we going to do in the second year? You see, we don't have another travel trailer to sell, so that would not be a good option. We would be scrambling to come up with that premium payment. But what we could do is, I'm going to divide this up in the first 3 years, since $15,000 divides so well, and I'm going to say that this policy premium could be $5,000. And then in that 4th year, the premium would drop to $2,000. If I think that I can sustain this, then yes, I could purchase a policy. And that would be a very good use of that $15,000. Now, another option I have is to save it. I could be saving this $15,000, and where could I save it? Well, I already have an outstanding loan of $22,000 on this policy, so I could send a loan repayment to the insurance company. Now, is it really a loan repayment? Well, no, it isn't. It's the sale of goods and services. But when I send a check to the insurance company, they need to know how to apply this to my policy. So they will call it a loan repayment. They will reduce the amount of outstanding loan that I have, and they will be only charging me interest on $7,000. So that's a great place for me to save my money. Yes, I could save that $15,000. Now, another option is I could use it as if. And what do I mean by that? Well, perhaps I want to go buy $15,000 of goods and services, but being responsible and wanting to use my money management account, I now want to set up loan repayment schedules so that I can be making these payments back to myself. Now, if I did the same example that we did before of $50 per thousand, that's going to be $750 for 24 months. Well, because this money did not come from my income in the first place, I may want to extend the number of years. I may want it 36, I may want it 48, I may want it even greater, just depending. The principle is that I want to make sure that this money gets paid back to my system over time. So yes, I could use it as if it came from my money manager's account. Now, the second example we want to look at is a tax refund. Say we got a tax refund of $3,000. Could we purchase another policy? Well, yes, we could. Now, before we go any farther, let's talk about this would not be a very big policy, because if we do our example as before, the $1,000, that's not going to be a very good big policy at all. But we still could purchase a policy if it's on a child, or maybe even a couple of policies on children. So is it still an option? Yes, it is. And then could we save the money? Well, yes, we could. We have an outstanding loan of $22,000. We could certainly do what we did with the $15,000 before. Could we go use that? Could we go purchase goods and services for $3,000 and then be making loan repayments back as if it went through the policy? And yes, we could do that. Now, I want to go back to our example right here of purchasing a policy for $5,000. What are we going to do with this other $10,000 in that first year? Well, we could be doing a combination of things. We can be purchasing a policy in the first year, and we could be saving that $10,000 in that first year as well. So we can do a combination of things. Now, the third thing though is, could we also use this $10,000? Well, you could, but be careful, because this $5,000 is going to be due in the second year. And you will want to make sure that if you have used some of this money, you have still either saved back the money for your second premium, or that you are budgeting your loan repayments to make sure that that money is going to be there for your second year. You'll want to do the same thing for your third year. So you can do a combination of things. Okay, now we're going to go and look at our third example, which is an inheritance. And for our inheritance, we're going to have $300,000 come in, and we're going to look at our options. Can we purchase another policy? Well, yes, we can. In fact, we can probably purchase more than one policy depending on our financial situation. If we've just started with our money management system, we may want to be purchasing multiple policies. And the second option we have is, can we save it? And yes, we can. Now, let's look here, though, at what we have outstanding at the insurance company. We had an outstanding loan of $22,000. That is not much savings out of $300,000. We could send over $22,000, but that's not a lot of money. Now, if we have a system of policies that have outstanding loans, then we will have more than one policy that can accept a loan repayment. Also, perhaps over time, this has increased to be more than $22,000. Depends when this inheritance comes in. If you have a more mature money management system with several policies, outstanding loans, great outstanding loans, then this is going to be a great place for you to put this windfall. If you have just gotten started, then you're not going to be able to save as much in the policies that you already have. And the third option, could you use your money as if? And yes, there again, yes, you can go be purchasing goods and services and making loan repayments. Now, because this money, again, didn't come from your income, you will have to budget accordingly for it to get back. In the case of an inheritance, it is probably going to be wise to do a combination of all three of these things. And how much you do at each level is partly going to depend on how mature your system and your money management, how mature your money management system is.